What's up, everybody? Welcome back to Earn It, Save It, Invest It. This is my 28th week of my $100,000 challenge. So I'm going to go over my whole portfolio, what I've done, any moves that I've made, what's going on in the market, right? We've gone over now the last week. So I'm going to kind of go over what I've done, go over the market in general. So if you can, please give a like and subscribe. I would really appreciate it. Thank you very much. And let's just break it down really quick on what's going on in the market, what's going on in my portfolio. So I'm currently at $8,576.20. Now I'm going to get this portfolio to $100,000. I am going to get it to $100,000. It's just going to take a little bit of time. Right now, this is my the portfolio holdings. My top performer and my top holder in terms of weight is a TQQQ. It's a 3x leveraged towards the Qs. It's high risk, high reward. But once this thing drops, eventually this will go through a very, very, very major drop. I'm going to load up on it at that time. But right now I'm just going to hold on to it. HIMS, I sold some a little while ago. I do believe in HIMS. I believe that the stock is going to go well up by the first quarter of next year, but it took a huge hit recently, as well as Celsius. So those two really hit my portfolio pretty hard recently. Meta, which I've been buying more into. We have Amazon, Fubo, Nike, Adobe, and Hesai. Adobe I'm also adding on to as well. And then I have $945 in cash, which equals about 11% of my portfolio, which is a little bit heavy. So I'm looking to buy some. I wish I had bought Google, but I didn't. My goal for week 28 would have been it is $9,581.04 if I am keeping up with my goal. But I'm at 8,576. I went down 2% for the week, and against my goal, I am negative 10%. So I'm about 10.5% away from my goal. Obviously. Or actually, no, I'm a little bit more than that. But compared to my goal, I'm about 10.5% away. So since June 2nd is when I started this challenge, I'm up about 16%. But if we take away all my $50 deposits, which I make a $50 deposit every week, I'm actually negative 1.74%. Now, the big thing about it is my portfolio, I started this whole challenge when I was up a lot, especially with HIMS. I knew that I was putting myself in a bad spot for the first 6 months, maybe even to a year, in terms of trying to meet that goal, because I knew, okay, this is a highly volatile stock and it's way up here, right? I know it's going to drop at some point, which it has. I think it was around in the 50s when I had it, maybe up to 60, and now it's down to 37. So I knew that was going to be a possibility. I think it's going to go back up to the 60s. I think it's going to go back up. I think it's going to go up to 100 eventually, but I have to wait. So that being said, this is why deposits really mean a lot, right? Making consistent deposits. Because I did that, I'm still 16% up compared to what I had, right? If I had just never made any deposit, I wouldn't have made any more money. I wouldn't have no more money into this account. And, 28 weeks, times 50, I've put in $1,400. So, I have $950 in cash, right? So that's a lot of cash that now I can deploy, where I didn't imagine. Now I'd have to be like, oh, let me just put in $900. Let me just put in $900 quickly into the account so I can right? So if I make $50 deposits every week, smaller deposits, I can at least build a cash balance in there. And when times are really needed and I really want to, I can. And so that's what's going to happen. But anyway, not doing too well compared to what I want to do. Now again, right here, right, $1,400 is what I have deposited into the account. I started with $7,354, deposited $1,400, and I have negative $171 in terms of my investment change, and that puts me here. Obviously, the calculations are a little bit different than Seeking Alpha. I just go to Seeking Alpha, even though this is actually my real account, right? So 85, 82, 85. So I'm slightly over. It's about $6 more. Not a big difference. But one thing I do want to show is that this is how my portfolio has performed since my challenge, right? I'm at negative 0.82%. But if we were to look at since I have been January 1st, I'm at least at 11%, right? I'm not doing as bad compared to these other indexes, and I would have been a lot higher, right? I would have been a lot higher if HIMSS and those other ones didn't go down, right? So not the biggest thing in the world. Obviously, I'm not to what I want. I'd rather be up higher than the indexes, but these high risk, high reward stocks right now are in the high risk territory, right? Or actually, right now they're in high reward. I think, when I started this challenge, it was at high risk, right? I knew that it had more of a risk going down than it had to go up. So now that it's so far down, it actually has more reward for it. So that's just that. I did buy Adobe, Meta, and Amazon, as well as the $50 deposit. So I bought $100 of Amazon, $100 of Meta, and $100 of Adobe. So about $300 total of buying, but I also deposited $50. So that puts me at about minus $250 to the account for the week. Now we did have a little bit of a drop on Friday. So I'll kind of go over that in a little bit. So this is the AAII Sentiment. And it's kind of crazy how for the last 4 weeks, we've had just two, the same exact, right? With 32, and then it bumped up. Everyone got bullish, 44, 44, right? And ever since Thanksgiving week. But it just hasn't moved. I mean, literally, look at the bears. Bears are not even moving, right? Look at the neutral, barely even moved at all, right? It just went from bulls to bears. From bears to bulls, right? So that's just kind of interesting. This week's special question, relative to 1 year ago, how do you think the average consumer is faring? Now, a lot of people are saying worse, right? We have 56% people saying it's worse, 25% basically saying it's about the same. So you have about 3/4 of the people saying, you're either doing worse or about the same. I would have to say the people who are saying about the same are leaning more towards worse than they are towards better. So that's not really great, right? The consumer's not doing great, and we're about to go into the Santa Claus rally. We have the fear and greed index. So we're still in fear. We hit neutral a little bit the last close, but we were still in the fear area. This is what I said was going to happen. We're not really going to jump into greed yet. We're going to stay here. I think until the end of the year, maybe until mid and January, then we can start picking up the greed a little bit for a few months, and then we'll pull it back. But it's going to be interesting to see what happens at the Santa Claus rally. A lot of the tax loss harvesting, right? We have a lot of stocks that can go down even more so just because they've already gone down so much in the year, like a Nike, Adobe, right? If you've lost money in that, then you might be selling it for tax purposes. That is the difference, though, about being an individual stock picker like me compared to an index, right? An index, you still have some maybe tax harvesting, but not really, right? In an index, you don't really get hit with the tax loss harvesting the impact, right? You're not impacted by it because that's really one stock kind of going down while other stocks are going to just be going up. So when you're in an index fund, tax loss harvesting does not hit you nearly as much as when you're an individual stock picker, because then you're picking a stock that might have a lot of losses for the year. So this is for the week. This is the performances. Obviously, big dogs kind of had a bad week. Microsoft is negative less than 1%. Same with Apple, less than 1%. But still, nonetheless, we're down, right? Palantir's up 3%. We have a few, General Electric, but we a lot of red going on right here in the finance department did well. Finance department did very well. Everyone else kind of had a mixed bag, if not just it wasn't that great. So the Qs, I've been keeping track of the Qs, right? Now, every single triangle that I have here, this is not a triangle, but I'm going to show you what that is in a second. All of these triangles represent at least a 10% or more drop in the market, right? Every single one of these, right? This is a 10%, this is exactly a 10% drop right there, right? A 10% drop in the market. Every single triangle. And I have this going back all the way to 2000, right? And this is the Qs, QQQ, right? Now, obviously, I didn't put a big triangle right here after the big .com. I mean, it started off with a big bang and then a big bang. So I just tracked how much it went down. It went down 81%, the Qs. Now, I don't think that's going to happen again, but something, we can still go down another 30-40% eventually at some point if we get too greedy. But all of these triangles, again, are at least a 10% or more down, down 10% or more. And as you can see, what's really interesting is we have like more longer drawn out kind of these, the 10%. They seem a little longer, right? And then we have like the 2010s where there was really nothing. We had, this, if you want to talk about the best time to have invested, this was the year. Look at this. Look at that. Between 2013 and 2017, basically 2018, you had no real drops in the market. That's just beautiful right there, right? You got one big scare right here, nice big buying opportunity for some people to buy back, about a year ago, and then you just keep going up. That's just amazing. But the point is, there's a lot of these triangles, right? Now, as we start getting into these years, COVID and stuff, where more people are into the market, feels like these drops are sharper. These 10% drops are sharper. They're harder, they're bigger, and they're faster. They're way more pointy. They are not they're not like this, they're like this, right? They're really, like this kind of a triangle looks like a normal triangle. A lot of them now are looking way more like an ice cream cone rather than a triangle, right? You look at this. And then you can even see what we have right here. Right now, what's interesting though, is if I were to actually have my chart, this would be nothing. This right here is a 7, almost an 8% drop, not a 10% drop. And we're recently going through about a 2% drop of the week. But when you look at this, we haven't hit that 10%. We still haven't hit that 10%. Now, we are up 13%, almost 14% over 171 days. Now I have these gold bars to represent the time. Now look, this is a drop that we had. It kind of looks like almost a 10%, or it's actually 7%. This is exactly what we went through, basically, right? 7%. See this? Boom. And then we go through a big bot, and then we can drop back down. Is that what's going to happen again? Are we gonna push up forward and then drop back down to here? Like, who knows what's going to happen, right? But these gold lines represent times of after we go through a triangle, how long does it take till we get to another one? How long in between these 10% drops, right? And not just from the start of one and then the start of another. It's the start of one and then we end, right? So once we pass that all-time, that bridge, right? So right here, right? You can see where we drop 10% or more. I'm only going to start this line after we have surpassed that again at a decent amount of time, right? I'm not going to do it here because we kind of bounced around. Oops. But here you can see we have 132 days, 79, 60, 167, 91, 175, 83, and now we're at 171. So I'm just saying there's something in me that feels like we have a 10% drop coming. And I know I called it out 2 months. I was saying that it should happen. It might happen in September. I said if the drop doesn't happen mid-September, it's probably going to be a bad October. That's what happened with HIMS. What did we have? We had a bad end of October into November. And that's what I was saying. I was like, if we don't even have a bad October, it's going to be a bad November, which we did. A 7% fall in about a month is pretty big. Not crazy, but decent. Nonetheless, I was off, right? No one's going to be able to predict 100% at all. But I do believe a 10% correction has to come. It's not like the market's like, oh my God, I can't even, it's like bulletproof or anything, right? The market is going to go down eventually. It doesn't mean to stop buying, right? I'm still buying. I bought Adobe, I bought Meta, I bought Amazon. I'm buying, but I'm also prepared. I'm being prepared because I just feel like we're 171 days out from the last 10% correction. And that usually doesn't happen. The average is about 110, 115 days. So we're way over the average ever since COVID. We're way over the average. And I don't know. Just something in me feels like we could have another bad beginning of the year. Didn't we do that? Was that this? Was that this? That was this, right? We had kind of like a bumpy, because we had the election, November, right? We shot up, right? I think this was the election right here. Yep, the election, boom, boom, right? We boosted up for the election, then we kind of had some volatile period, and then we fell at the beginning of the year. We only had that one fall, and it was a big fall, and it was all over the tariffs, right? That one was very, very specific, right? Now, the market doesn't just fall. It won't just fall for no reason. Earnings have been good, right? We don't have any more earnings until January. So earnings have been good. Earnings are not really going to affect what happens over the next 30 days. So what will, right? What do the retailers feel, right? We're going to have about a week vacation of Christmas, right? Wall Street kind of goes on vacation, right? You saw that in Thanksgiving. We shot up for Thanksgiving. Are we going to have that same kind of rally? Are we going to have another Santa Claus rally where the Wall Street takes a break? Retailers say, hey, we want to make some money. We believe, and they start, pumping things up a bit. I don't know. I'm just saying a 10% drop is bound to come eventually. Oops. There we go. Like and subscribe. But yeah, please give a like and subscribe if you're at all watching anymore. I appreciate everyone who does watch this stuff. I'm just giving my opinions, just kind of going through my process of what I'm doing, putting more accountability on myself, putting more motivation and inspiration, right? If I don't do these videos, it's not that I won't do it, not that I won't be investing and doing stuff, but this just puts a little bit more emphasis to make sure I'm putting out the correct information and trying to do the correct thing, right? Limit my mistakes even more so, put my ass out there. So please give a like and subscribe if you like this stuff. Always be prepared, don't be scared, the market, and never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.